Hey everybody, Adam Criticos here at Cross Country Mortgage and the Criticos Group. Hope you're doing well. Today is market update, and I want to provide you with several different updates with the market. So we have number one, we're going to talk about the housing market. Two, we're going to talk about rental and the rental market and how it's getting so expensive. And then three, we are going to talk about interest rates. So the first, I'm going to share this chart with you, and let's see here. All right, perfect. So what you're looking at is this is a chart that was created by Redfin and uh, MBS Highway. So thank you very much for them for providing us with this great data. This number represents in 2019 what the bidding war was like, or multiple offer situations were like prior to the pandemic. And the reason why this is important to know is because we want to be able to compare where a normal market is prior to the pandemic and now what we're entering now, which is more of a normal market. So in 2018, if you don't remember, mortgage rates went up dramatically. They went up to close as high as 5%. So we saw this bidding war that dropped from a national average of 59% down to 13%. So when interest rates, again, similar to our market that we're in now, when interest rates went up, the demand went down, and we were in a multiple offer situation of 13%, right? That's pretty low. Now, fast forward to today, and looking at this next chart based on, right, based on, this is Redfin's multiple offers for July of 2022, we are seeing that now our market is still very strong. 44.3% of all homes are still in a multiple offer situation. So we are not only just still in a, now we are entering a normal market, but it's even stronger than a normal market if we look back to prior to the pandemic of 2020. So we're at 44% of all homes are in multiple offers. We're seeing about 3 to 4 homes that are, there are 3 to 4, I'm sorry, offers on average for every home. Now, granted, it was as high as 70% in January, but in January rates were still at 3%. So interest rates have doubled since then, and now we're above 5%, and we are still at 44.3% of all homes are in multiple offers. So even with the big increase in rates, you're not seeing that same drop that we saw prior to the pandemic in 2019 go from 60 to 13%. And so what we're going to end up seeing is, yes, we're seeing some price reductions, but because of if the house is priced right and it's a nice house, you're going to see multiple offers. I've seen 3 multiple offer situations for my clients just this weekend. So very strong still, and it's just going to stay strong as supply stays low because we're just not building enough homes. Next, I want to talk to you is about the rental market. So, whoops, there we are. All right, so renting is expensive. Yes, it is. So if you don't know, low-end rental prices were up 14.2% across the country. This is a national average, and so we're as high as 12.5% for high-end prices. So on average, rent goes up about 3 to 5% per year. Due to the pandemic, a lot of landlords sort of pulled back a little bit. And so this is an indication that rent will continue to go up as the new leases come into a place. And we're seeing in some instances as high as a 25% increase in rent. I have a client that is now buying because her landlord was increasing rent from $3,500 a month to $5,000 a month. So still a lot of opportunity to, instead of throwing your money away renting, when you're, as a first-time home buyer, you can pay your own mortgage instead of your landlord's mortgage. And this is great for any agent that's listening right now to speak to their first-time home buyers that with rent's just going to continue to go up, and it might be better to look at buying your first home instead of continuing to pay rent. Same thing with my clients that are currently pre-approved. These are the national averages, so it's super important to see if you haven't seen it already, the increase in rent. So where are rates at right now? And what are we looking to see where the market is? So I'm gonna share one more chart with you. Let's see, just give me one sec. Okay. So what you're looking at here, what I'm sharing is the mortgage-backed security market. This is a mortgage-backed security chart. If you don't remember from other presentations, the lower this number is, the higher the interest rates are. So back in August of this month, interest rates were the lowest they've been since May, and they were right around 5%. Over the last 3 weeks, we've seen interest rates slowly tick up, and this right now is now a resistance. What that means is that we have some more room for interest rates to continue to go up until we hit this support. So we've gotten a couple alerts to lock recently. So most of my clients that are under contract, they've already been locked in. And so what we can expect is interest rates to go up a little bit over the coming, maybe a little bit over the next week or so. But the Federal Reserve is going to be talking about releasing their minutes from their Fed meeting, and that could move markets up or down, just depends. So just keep that in mind. We're still lower than we were in June, but heading. I'm sorry, we're still higher than. Lower rates are lower than we were in June, but we are still higher than we were in August. Awesome. So what does this mean, right? So we're still in a very strong housing market. So multiple offers, rent is going up higher than normal. And so for being a first-time home buyer, or if you're considering buying, what you have to look at is the actual investment. Okay, you're gonna have to pay rent, or you're gonna have to pay a mortgage no matter what, unless you buy a property cash. So if you're getting financing, mortgages are still a fantastic investment. And that's because it's a leveraged asset. So for example, if you buy a $400,000 home, putting 10% down and with a 4.5% average increase in property value over the next year, that will net you approximately a 32% return on your initial investment of 10% down. The stock markets is very volatile right now. So housing is still considered a very strong investment, and you need a roof to put over your head, and it's a solid asset. So these are just some things to think about when it comes to the market. If you're hearing on the news that things are not looking good for the housing market, the numbers don't lie. This data is coming directly from Redfin and MBS Highway. And so this will let you know that real estate is still a very strong asset and very great investment. And now still a fantastic time to buy, especially if you're looking at where things were the last 2 years, when there were 70% of homes in multiple offer situations. So please call me if you have any questions. Here to help you with anything that you need. 847-942-1497. Thanks so much, and have a great day.